Welcome back. We're now joined by Punita Kumar Sinha, the Managing Partner of Pacific Paradigm Advisors. Punita, great to have you, and happy Women's Day, right? It's just apt this week that we get you on the channel. But you know, so much has been thrown at the markets in the last 2 months. The underperformance versus China, the Adani saga, higher inflation rates, higher interest rates. We're now talking about the possibility of a 6% terminal rate for the Fed. You know, the kind of fall that we've seen, the underperformance of the PSU banking space in the last 2 months, it's been a tough time for money managers. How have you navigated the volatility in the last 2 months, and how should one position their portfolio?
Indeed. First of all, happy Women's Day to all the viewers and to all the anchors at CNBC. Yes, it's been a very volatile and tough times, and I don't think that's going to change anytime soon. I think this is the time to remain defensive in value names, in quality names. India's growth is still looking good compared to a lot of the other countries, but this China reopening trade has taken a lot of focus away from India into China and North Asia. So a lot of at least foreign money is looking at the recovery of China, and that's the trade that's been in play right now. India is actually not in focus from the short-term investors. Of course, from long-term strategic investors, India is as important as it's ever been. And so a lot of the strategics, the companies, global companies are still looking to India as a China plus one possibility. So I think that the long-term growth of India is actually looking very good. But from a short term, India's valuations are not as attractive versus its own history and versus other emerging markets. And so at the moment, I think the focus is on, some of the other emerging markets.
Okay, Punita, hi, welcome to the show. You know, we just did a piece on how there is an IPO in the Tata Group after what, almost 20 years, Tata Technologies. But how are you feeling about stocks like Tata Motors now? Because the company is doing all the right things, reducing debt, monetizing their assets, but somehow the stock just doesn't give returns to shareholders, at least in the recent past.
Yeah.
How are you feeling about it?
No, I myself have been a victim of Tata Motors because, every time we think it's looking really attractive and the auto cycle should rebound, for whatever reason, the stock is not performing. I think too many people have got burnt in it in the past, so more cautious to get back in. But I do think the auto sector is seeing recovery and should see some recovery because, post-COVID, and the supply chain issues. Now, finally, supply chain issues for the auto sector have somewhat normalized. So there's more volumes available to sell. So I think things should improve from here on. But having been burnt myself, I'm not like gung-ho or getting back in aggressively.
Okay. Hi, Punita. We saw a big commitment from GQG partners, Rajiv Jain committing $1.8 billion to the Adani Group. Have you tracked this space, and do you think a lot of the valuations in Adani Group stocks have become attractive now?
Well, this is a tricky one, and I have not tracked it very closely because we don't hold any Adani stocks, and I think there's a lot of companies in India that one can buy. So especially the focus on ESG. We look at companies where there's, the controversial, number of controversies are lower. And so as a result, we've not really been investing in this.
Hi, Punita. Good evening. Thanks so much for joining in. Any ideas, any themes you could share? As you said at the start of this conversation, that you could look at defensive names as well. What would qualify as defensive in this sort of a market scenario?
So, for one, I think Bharti is looking good, I think. So that's a stock that one can look at. In addition, I think, it's interesting because while we are very dependent on macro data on global markets, and India is moving in line with those cues, so the Fed commentary seems to be driving most markets. However, if you look at within sectors, there's attractive opportunities in almost every sector. So For instance, I still am a big believer in capital goods manufacturing because I think this outsourcing from globally to India, the inward outsourcing to India is a theme that's really, really growing. And for that, we need to really build our manufacturing capacity, and that would mean that a lot of sectors that are sort of, enabling the manufacturing sector will do well. But if you look at valuations of most of these companies, it's a lot of it is in the price. And so you have to be very selective. I mean, while the theme is very good, and from a growth perspective, the growth rates are going to be very strong. But then how do you look at valuations? Because you're in a new regime where growth is higher than it's ever been, because we've never seen this kind of demand for India. But then the valuations are reflecting that, right? So I think in every sector, there are some stocks that are relatively more attractive. But overall, I think India's valuations are still at about 10 to 15% premium to its own history and to other emerging markets. So you have to be very selective. Whether it's banking, I think there is valuation disparities there that one can capitalize on. You talked about autos. There are some valuation disparities there. Telecom, I mentioned.
Punita, since you said autos, and you've said you burnt your fingers with Tata Motors, I just want to take a try at this one. The big theme this week, in the week gone by, was electric vehicles, and we saw, a huge surge in names like, say, an Electra Green Tech, a JBM Auto. Do you track this EV, e-buses space, and do you see any opportunity here for investors?
So, I have been looking at EVs, but more on the venture side, not so much on the listed space, because I think there's more opportunities in the new technologies that are coming up.
Okay, with that, we will take your leave. Thanks a lot, Punita, for joining us, and have a great weekend. Thanks for being with us on this edition of Editors Roundtable. And to all of you folks, have a great weekend. We'll see you again bright and early Monday morning. And all of you, have a good weekend as well. Nigel, I know, is off for a holiday. Nigel?
Absolutely.
Have a good one. We'll miss you.
We're going to miss you.
I'm going to have a great one. I hope I'm going to miss you all as well.
I'm sure not. I'm sure not. But better get something back for us, okay?
For sure.
Chocolates, and that's all we want. Nothing else.
That's doable.
All right, folks. We'll see you guys bright and early on Monday morning. Have a great weekend.